Have you been watching all the videos about HELOCs going around and investment properties and all the fun stuff that sounds so easy? Yeah, me too. Look guys, Texas has really strict rules around HELOCs, so don't get caught up in what you're seeing from everybody else. Texas, I mean, we just released our HELOC at Cross Country Mortgage for Texas, but we had to adapt to the Texas laws on that. So HELOCs can be a really great thing if you're financially prepared for it. HELOC can help you do debt consolidation, renovations around the house, college tuition, you name it, it can help you with that, okay? So it is a great tool. Now, it sits as a first or second lien, okay? So just understand that if you have your primary mortgage on your home, you're going to have a second lien in that HELOC. And you have to pay it back monthly just like you pay your mortgage. So it is like a little mini mortgage, okay? Second one. So in Texas, you cannot have a second lien on your home already to get a HELOC. The HELOC takes the position of a first lien or second lien. So if you have your home paid off, you can take out a HELOC, it'd be your first lien. If you have a primary mortgage, don't have a second lien, and I'm talking even those liens from COVID when we all kind of had our mortgage issues, if we were unemployed for the time and had to put that second lien in place, that they've told us we don't have to pay off right away, but later, it's considered a second lien, guys. Just FYI. So a HELOC can take the second lien position, but that's it. It will not take a third lien or a fourth lien position or anything else, okay? In Texas, you have to have a 640 minimum FICO score, which is higher than other states. And you do have, sorry, it's only a primary home. I had to check my notes for a second. I knew I was forgetting something. No investment, no secondary home. So you cannot, as an investor, say, oh, I have this investment property. I'm gonna take a HELOC out on that and then go do something with another investment property. Not allowed. One on your primary home and that's it. So it won't be multiple HELOCs in Texas, okay? The minimum draw amount is $35,000. So let me break this down for you. If you own a home and it is valued at $500,000, which we do a valuation on it to determine how much it's valued at so we can figure out the equity. And you have a loan amount still due of $250,000 that you're still paying for. So right now you have a ratio of 50%. Your loan to value is 50% because your loan's $250,000, valuation's $500,000, bam, okay? That's a number we use in the mortgage industry. Now, in refinances and in HELOCs, we use a combined loan to value ratio. So if you have a first lien and a second lien, we add those together to get the combined loan amount. So if you had $250,000 plus whatever your HELOC amount is going to be, it equals your total combined loan to value. You cannot go over 80% in Texas. So if you have 50% loan to value right now, you cannot go over that 80% in your amount of HELOC you take out. So you cannot go up to 100% of the value of your home. I just need everyone to understand that because people see they have equity and they think they have enough equity, but sometimes you don't because you can't go over 80%. And the minimum draw is $35,000. So if you don't have enough space at $35,000 between that spot of where you're at now to that 80%, then you can't make a HELOC withdrawal, okay? So when you're approved for a HELOC or qualified for a HELOC, you get a disbursement and you have to take 100% of it. You can't just take half of it. So whatever you've decided on, that's it. You have to take all of it and then you decide on some different other fees that you can pay. It's kind of like a sliding scale. If you want to pay more fees up front that get bundled into the loan, so the loan's higher, but the monthly payment is lower, you can do that. You can also decide several different things on how the terms, repayment, and all that. Your credit score obviously affects the rate, and then also the percentage of combined loan to value will also affect the rate. So if you have a paid off home and you're taking out $100,000, your combined loan to value is going to be a lot lower than someone who's at a 50% LTV and they want to max it out to their 80%. The interest rate is going to be a little bit higher on that because you're taking more of a loan out, so it's a higher risk of repayment. So HELOCs, there's a lot going on about it. The process is really quick and easy though to get qualified, and I can help you with that. I'll try to attach the link either in my story or below, but if you're interested in looking to see if you qualify, just comment HELOC too and I'll send you the link. But just make sure you got those things lined out before you apply because it can be really devastating to be excited about getting a HELOC and then you don't have some of those other things in mind that we just talked about, so it falls through. Text me, 832-248-8845 if you have any other questions, and I'll see you later.